Okay, it's April 29th, 2025. Welcome, everyone, to the 28th episode of Finwell Daily Brief.
Great to be here.
Let's jump right in with our financial fact for today. Did you know this? Indian families collectively hold nearly 25,000 tons of gold.
25,000 tons. That's massive.
It really is. It's the world's largest private gold hoard. To give you some scale, that's about 6 times what the U.S. has locked up in Fort Knox.
Wow. Yeah, it really highlights the cultural significance of gold in India, doesn't it? It's not just jewelry, it's savings, it's security.
Exactly. More than just paper assets for many.
And that has real implications for, investor behavior. A huge chunk of wealth sitting in gold.
Yeah.
Well, it's less liquid, right? It might not flow into stocks or bonds as readily.
Good point. Affects capital flow, potentially investor participation in markets.
You definitely see gold demand spike in uncertain times. It tells you something about the risk appetite, or maybe the traditional approach to wealth preservation.
Fascinating stuff. Okay, so let's pivot to today's market close, April 29th. Felt like a bit of a mixed bag, maybe even a flat day overall.
Yeah, pretty much sums it up. The Nifty 50 finished at 24,328.65, barely moved, down just 0.15 points, so effectively 0% change.
Flat as a pancake. But what about the broader market? Mid-caps, small caps?
Well, there we saw a bit more life. The Nifty Mid-Cap 150 was up 0.22%, closed at 20,010.35.
Okay.
And the Nifty Small Cap 250 also saw a similar gain, up 0.21% to 15,639.70.
So the smaller companies outperformed the big guys today.
Well, it did. Even the new Nifty Total Market Index, that one edged up slightly, 0.04%, ending at 12,418.55. The market breadth was quite mixed, though. Well, specific stocks did well, but the gains weren't really spread across the board. Suggests the overall rally wasn't super strong.
Yeah. Selective buying. Who are the main drivers then? Any big names moving the needle?
Reliance Industries, RIL, definitely stood out. It rallied about 2.3%. That alone added roughly 180 points to the Sensex.
Wow. Okay. RIL carrying some weight.
Yeah. And we saw some moderate gains in IT and manufacturing too, but financials and telecom were a bit subdued.
Right. And how about bonds and the rupee?
The benchmark 10-year government bond yield, it actually eased a bit, down to around 6.44% from closer to 6.50%.
Interesting. Any reason why?
Could be shifting expectations on interest rates, maybe linked to the RBI's moves we'll probably touch on.
Okay. And the rupee?
Pretty steady. Traded near 85.26 against the U.S. dollar.
All right. And commodities? Heard oil was down, but gold held strong.
That's right. Oil prices dipped. Brent crude fell about 1.5% to near $65.90 a barrel. Mostly concerns about global demand, trade worries lingering.
Yeah, makes sense.
But gold, still very strong.
Yeah.
Near that, 100,000 rupees per 10 grams mark in India. Trade tensions definitely keeping its safe haven appeal alive.
Okay, big picture stuff. Let's get into the top news then. RBI action seems like a major point.
Absolutely. So back on April 9th, the RBI cut the repo rate again, another 25 basis points.
Right, that's the second cut in a row.
Exactly. Brings the rate down to 6.00%. And importantly, they also shifted their stance to accommodative.
Which signals?
Signals they're leaning towards keeping rates low, possibly cutting further to support growth. They actually trimmed the GDP growth forecast for FY26 slightly, down to 6.5%.
Why the dovish shift?
Primarily softer inflation figures and worries about global growth slowing down. Gives them room to act.
Speaking of inflation, the latest numbers look pretty good.
Very good, actually.
Yeah.
Retail CPI inflation for March fell to 3.34%. That's the lowest since, I think, August 2019.
Wow. Driven by food prices mostly.
Yeah, easing food prices were the main factor. And like we said, this low inflation figure really opens the door for the RBI if they feel the economy needs more support.
So how did all this play out in the equity markets today, beyond the flat headline numbers?
Well, Indian indices were in a tight range. Sensex managed a small gain, about 0.1%. Nifty, almost flat, like we said.
And Reliance and Infosys helped prop things up?
They did. They were the main gainers driving the indices. But financials, telecom, they lagged a bit.
And how did we compare globally?
Interestingly, overseas markets were mostly down, U.S., Asia. They fell on those mixed signals about U.S.-China trade talks. So India held up relatively okay in that context.
Gotcha. Let's switch gears to corporate news. Mahindra & Mahindra finalizing that SML Isuzu deal.
Yes, that acquisition of SML Isuzu's truck and bus business is now complete. Analysts are seeing it as a pretty smart strategic move for M&M.
How so?
Well, it significantly expands their commercial vehicle lineup, boosts their market reach, should be positive for them long term. We actually saw a bit of a lift in auto and manufacturing stocks today. possibly helped by this news.
Makes sense. Okay, back to commodities for a second. Anything else besides oil and gold?
Well, the oil weakness, as we mentioned, is tied to those U.S.-China trade worries impacting demand forecasts. Gold's strength is really reflected in Indian bullion ETFs, too.
Oh, yeah.
Yeah, they're up about 18% year to date. That's quite a jump. Shows you the level of investor nervousness, maybe.
Definitely a sign of the times. And agriculture.
Agri-commodities prices seem pretty steady. Farmers are, keeping their fingers crossed for a good monsoon season. That's always crucial.
Always is. And finally, any standout stocks? You mentioned mid-caps earlier.
Yes, some specific mid-caps really surged. Shipbuilding firms, interestingly. Mazagon Dock, or MDL, hit a record high, up around 9%.
9%? Wow.
And GRSE, Garden Reach Shipbuilders, jumped even more, about 14%, on huge volume.
What's driving that?
Mostly speculation, it seems. Talk of potential new naval orders, plus maybe just general interest in defense stocks globally.
Interesting. But IT majors and financials were more mixed.
Yeah, kind of a mixed bag there. Seems like some profit-taking after recent gains might be happening in those spaces.
Okay, that's a great rundown. Now look, if you're listening and finding this daily financial breakdown useful, if you want to stay informed and, frankly, ahead of the curve,
then you really should be subscribing to Finwell Daily Brief. Seriously, it's designed to cut through the noise and give you those essential insights you need every day. It's your guide in this complex market.
Absolutely. But don't stop there. For, deeper dives, asking questions, connecting with others who are passionate about finance, you've got to connect with SOS Finwell on LinkedIn.
Yeah, it's a great community, lots of good discussion happening there, really expands your perspective.
So don't wait. Subscribe to the brief, connect on LinkedIn, empower your financial journey.
Okay, let's shift gears now to something really important. Scam awareness. Specifically, let's talk about pump and dump schemes.
Pump and dump? Sounds nasty. What exactly is it?
It's a type of stock fraud. Basically, fraudsters pick a stock, usually a small cap or one that doesn't trade much, illiquid we call it. Then they start hyping it up like crazy.
How do they hype it?
Oh, through emails, social media, online forums. They spread rumors, make false claims, promise huge quick returns. That's a pump part, inflating interest and demand artificially.
So people get sucked in by the hype.
Exactly. FOMO, fear of missing out, kicks in. People start buying. The price shoots up based on nothing fundamental, just the manufactured buzz.
And then comes the dump.
Precisely. The fraudsters, who own the stock from the start, sell all their shares at the inflated price, making a big profit.
Leaving everyone else holding the bag when the price crashes.
Absolutely. The price collapses, and all the investors who bought in late based on the hype suffer significant losses. It's pure manipulation.
That's terrible. So what are the red flags? How can people avoid falling for this?
Key thing is skepticism. Be extremely wary of unsolicited stock tips, especially those promising guaranteed high or fast returns. That's a huge red flag.
Right. If it sounds too good to be true.
It probably is. Also, watch out for stocks that suddenly spike in price for no apparent reason, no real news, no positive earnings report, just hype.
So do your own research.
Always. Check credible financial news sources. Look at the company's official regulatory filings. Don't just rely on rumors or anonymous online posts. Legitimate investments are built on fundamentals, not hype.
Is this the FOMO?
Definitely. Protect your capital. Do your homework. Don't let yourself be pressured into making impulsive decisions based on hype.
Solid advice. Okay, zooming out again. What's the overall market outlook now? Cautious? Optimistic?
I'd say the sentiment is cautiously optimistic, maybe, but with a definite dose of caution. There are positives, for sure.
Like the RBI's stance.
Yes, the RBI being accommodated, plus that cooling inflation we talked about. That's supportive. Lower rates could help borrowing, consumption, maybe overall growth.
And certain sectors might benefit.
Potentially. Defensive sectors, like FMCG, pharma, the ones with stable dividends might appeal to retail investors right now. And financials could benefit from lower funding costs, too.
But there are risks, headwinds.
Oh, absolutely. Global growth worries haven't gone away. Geopolitical tensions are still simmering. That creates volatility.
And trade tensions, U.S.-China?
Still a factor.
Yeah.
While falling oil prices help India's import bill, which is good, those trade frictions and rising protectionism globally, well, that could hurt our exporters, particularly in the IT sector.
So sector-wise, where should we be looking? Any specific areas?
Well, the small and mid-caps have shown strength. If domestic demand holds up, they could continue to offer growth. Keep an eye on them.
And infrastructure, auto, like M&M.
Definitely worth watching. Infrastructure spending, policy updates there, and auto, yes, especially after moves like the M&M deal. See if that momentum continues.
Any sectors facing pressure?
Tech exporters, as I mentioned, could face some pressure if global tech spending stays tight. It's something to monitor.
Okay. What about NRIs? Anything specific for them?
Actually, yeah. The rupee has been relatively stable, and we're seeing some positive trends in Indian real estate, especially in places like Gujarat.
Yeah.
So that might look attractive for NRI investment right now.
Interesting. So putting it all together, what should investors be thinking about, strategy-wise?
For retail investors, diversification is still key. Always. Given the volatility, maybe consider locking in some gains, shift a bit into safer assets, high-quality bonds, maybe even gold, as we discussed.
But stay invested in equities long-term.
Oh, absolutely. Don't abandon equities for long-term growth, but maybe rebalance slightly. Professional managers are probably looking at sector rotations.
Meaning?
Heavy trimming positions in sectors that have run up a lot, like IT or defense recently, and looking for value in perhaps under-owned mid-caps.
Makes sense. And what should everyone be watching?
Keep a close eye on domestic policy infrastructure spending. Monsoon forecasts are huge. And globally, what the U.S. Fed does. That always impacts foreign flows and, consequently, the RBI's thinking.
Right. Lots to track. Okay, let's wrap up today's briefing then. Quick recap of April 29th.
Sure. A mixed close overall. Nifty, pretty flat. Sensex up just slightly. Key drivers were that accommodative RBI stance, good inflation numbers, RIL strong performance, the M&M deal news.
And countered by lower oil prices, but also those ongoing global trade jitters.
Exactly. A real mix of signals.
So the main takeaway for listeners today.
Stay balanced. Stick to your systematic investing plans, your SIPs. Be super careful about speculative stuff and those pump and dump scams we warned about. Focus on quality.
Focus on quality. Good advice. And we'll leave you today with this thought. Every rupee put to work today has the potential to secure 1,000 tomorrows.
A powerful reminder. Thanks for tuning in to this episode of FinWell Daily Brief. Please do subscribe so you don't miss our daily insights.
Yes, and connect with SOS FinWell on LinkedIn for more analysis and great conversations. We'll catch you on the next briefing.